Hello traders, today the dollar is coming under pressure following the PPI report from the US, which came in weaker than expected. This is going to be an important week for the US dollar. We have CPI data coming tomorrow, and ahead of it you can see that core PCE was flat month over month against expectations of a 0.2% increase. As a result of that, we saw the US dollar fall across the board, the dollar index moving back lower from the shaded grey area where it had previously found support from. Now, looking at a few major currency pairs, the euro dollar has bounced right where it needed to at around 109 area, which was previously resistance. Remember, the euro dollar broke this bearish trend line that had been in place since July of last year. Once it did that, the retest on the upper side of it held, causing a big move upward to reach the 110 handle before dipping back down ahead of today's or this week's inflation data. We're now seeing a recovery with rates holding above the broken resistance area. So the path of least resistance from a technical point of view remains to the upside for the euro dollar. And I wouldn't be surprised if rates were to move to 110 and possibly break above it this time, especially if the CPI data comes out weaker than expected tomorrow from the US. Now, thanks to the equity market comments, we've seen the likes of the Aussie dollar and the Kiwi dollar all bouncing back strongly. The Aussie dollar has potentially created a double bottom or a false break reversal pattern here, and it's now moved back above this broken support area at around 66. So a close above that area could potentially pave the way for more gains in the days ahead. Now, it's going to be an interesting week for the cable. We have CPI data from the US and the UK coming up on Wednesday, and ahead of it we can see that the weekly chart of the cable has turned positive following a 4-week decline, which caused rates to drop all the way back down to the 127 support area, where previously the cable had broken out from. So the retest of the trend that has been taken out has held, which is a positive technical signal. The path of least resistance on the cable is therefore to the upside, but if and when the cable were to go back below this 126.15 level, then that would point to a false breakout scenario, and at that point I would drop my bullish bias on this currency pair. It looks like gold is going to hit a new record high above July's high of 2,483. It has bounced right where it needed to last week, finding support at around this bullish trend line that has been in place since basically the middle of February. The fact that it has now broken above this grey shaded area, which was previously resistance back in April and May, this is a further positive news for gold bulls. Although that being said, gold did break this level a few other times in the past, but on both occasions gold couldn't hold its own above that area. So let's see if it will be able to hold above this zone, given that we've seen weakness in US dollar and US data at this time. So I think if it can hold above this area, the path of least resistance will remain to the upside, and we could see gold climb to 2,500, possibly 2,600 thereafter. So the path of least resistance on gold remains to the upside as well. And for more market analysis and insights, make sure to check out the news and analysis section at cityindex.com. I'll see you in the next video. Take care.